So today, good afternoon. So this afternoon, we'll be looking at the technical way of analyzing the market. So we'll be looking at technical analysis. Yesterday, we talked about the sentimental analysis and the fundamental analysis. So today, we'll be looking at the technical analysis. The technical analysis. Now, let's start by looking at what exactly is technical analysis. What exactly is technical analysis? Now, when we talk about technical analysis is basically the study of price. Technical analysis is basically the study of price. So this is basically the study of price movements. Now, whatever method you are using to study price movement then is a technical analysis. But we'll be talking about some of the methods you can use. And what are these? That is using technical tools, price action. So you can decide to use technical tools, price action, or indicators, So, and what are you trying to achieve? To determine the probability of the future direction of price. So basically, when we talk about technical analysis, this is basically the study of price. And we'll say study of price, that is, you're using the technical tools or probably the price action or indicators to determine the probability of future direction of price. So this means that when you see price moving, there are some things that could help you predict the direction of which price will be moving. And you can only achieve, or you can only see these things by using any of these methods, which is either the technical tools, the price actions, or the indicators. So let's pick an example of each of them. Let's start with the technical tools. Now, as a trader, there are different technical tools. And the truth is, I cannot teach you all the old technical tools here. So you need to do your research, but I will just list some so that when you are doing your research, it can help you to do some research. Now, one of the technical tools is what we call the Fibonacci. We have the Fibonacci. It's a tool that is on the MT4, or maybe your trading view, or whatever ways you're using to analyze the market. So we have the Fibonacci, and under the Fibonacci, there are different types of Fibonacci. We have the Fibonacci retracement. Second one, we have the Fibonacci arc, and also we have the Fibonacci expansion. So you can do your research to know how these different tools can help you determine the future direction of price. Apart from Fibonacci, there is another tool that we have, which is called the Andrew Pitchfork. The Andrew Pitchfork. Now, this is another tool that you can use to analyze the market. We have many others. But when it comes to tools, all these tools helps you to predict the direction of price movement. Now, let's go to the next one, which is under the price action. Under the price action, what are the different ways of analyzing the market when it comes to price action? What are the different ways of analyzing the market when it comes to price action? The first one is what we call support and resistance. we have support and resistance. Some people call it key levels. So they are the same thing, support and resistance. Support and resistance. Why some people call this also key levels? So it means the same thing, support and resistance. Some people call it key levels. Now, another way, okay, then another way you can analyze the market using price action is what we call candlestick rejection pattern. This is another example of price action. Also, we have what we call chart pattern. We have chart pattern. Also, under the price action, we have the Elliott wave. Then also on the price action, after the Elliott wave, we have the harmonic price pattern. All these are different ways you can analyze the market. Harmonic price pattern. All these are different ways to analyze the market using price action. Now let's go to the third way, indicators. Now, when it comes to indicators, we have different type of indicators. But in some way, when we talk about the indicator, we have two major categories. We have the default indicator, and we have the custom indicator. These are the two two different groups when it comes to indicator. Now, the default indicators are basically those indicators that comes with our MT4. So any indicators that comes with your MT4 is known as the default indicator. While those that come with your custom that you buy. Now, so as you go on in this industry, you see some people that will tell you, oh, I sell indicators. So in as much as you are buying an indicator, then it is known as the custom indicator. So you could see someone telling you, I sell indicators. So when they tell you this, don't be afraid, don't run away. It is also part of the business. So it is known as the default, the custom indicator. But when it now comes to a situation whereby you get them from the MT4, then it is known as the default indicator. So I'm going to share my slide, my chart now, so you can see how to see a default indicator, how to identify a default indicator. I'm going to be sharing my slide now, so you can see or identify a default indicator. So let me share my slide. So share my slide. Okay, so if you are on your laptop, you can see if you're on your laptop like this and you want to see the default indicator, just click on this. Okay, for those that, okay, let me do this. Okay, so if you want to see your default indicators, you'll come to this point. So under your navigator, you will always see your navigator. Under your navigator, you will see indicators here. Or another way to see it is come to insert, then come to indicators. So you will see it either from here, insert indicators, then you see the different type of indicators. So these are trend indicators. These are default indicators. Now, under the default indicator, we have indicators for trend. Now, the question is, when we say trend, what does this mean? It means that this different type of indicators helps you to identify the trend of the market. When I say the trend of the market, basically, we have three different trends. We have the upward trend, the downward trend, and the sideways trend. Those are the three different trend that we have. So all these different type of indicators, there are different uses that you can, there are ways you can use them that will help you identify the trend of the market. So you need to now do your research to know how you can use all these indicators so as to determine the trend of the market. Now, after that, we have indicators that helps us to determine the oscillator. So all these are default indicators that helps us to determine oscillators in the market. And thirdly, we have the volume. So these are indicators that helps us to determine the volume of the market. Then lastly, we have the Wilson indicators. All these are default indicators. And this is the last place where we now have the custom indicators. So all these custom indicators now are situations whereby you have reasons to buy indicators, then you can put them under the custom indicators. Now, for those that are new to trading, your custom indicator may not be as many as mine. It is because at one point or the other, I've been able to add to these indicators. And that's why I have them as many as this. So custom indicators. So these are the different types of indicators. If we are together, please let's wave our hands. Okay, good, good. Now let's go back to our whiteboard. Let's talk about what we have today. Now, basically, as a trader, for today's topic, we'll be looking at the indicators. For today's topic, we'll strictly look at indicators. So we'll just be picking some of the default indicators, and that is what we'll be treating today. So let me remove the price action and the technical tools. So what we'll be looking at today is the custom default indicators. So that is it. So we'll just pick some of it and talk about it. But before we go there, I want to talk about what we call a trading strategy. A trading strategy. I want to talk about what we call a trading strategy. Now, the question is, what is a trading strategy? Now, the moment you begin to combine different trading strategy. Okay, let's assume that, let me see. Now, when you want to build a trading strategy, you could now build it around this. Now, I could decide that, okay, let me define what a trading strategy is. A trading strategy is a predefined rules. I repeat, a trading strategy is a predefined rules. A trading strategy is a trading strategy is a predefined rules. Defined rules is a predefined rules that tells us when to take a trading decision. Is a predefined rules or probably a criterion that tells us when to enter for either for a buy or a sell. Now, what this means is this. For you to say you want to enter for a buy on a particular currency, or you want to enter for a sell on a particular currency, there must be a reason for this decision. Now, this reason is your trading strategy. And that's why when you see a trader that enters a buy and you ask him, why did you buy? And they said they don't know. It means they do not have a trading strategy. So a trading strategy helps you to know why you are entering for a buy. And for you to create a trading strategy, you are expected to use any of these conditions. Now, funny enough, what even makes it different is you can even combine. So I can come up and say, for my trading strategy, I'm going to be using support and resistance with retracement. So I may be combining support and resistance with retracement before I am for my trading strategy. I may say I'm combining support and resistance with indicator. I can say I'm combining support and resistance with candlestick rejection pattern. Or probably I may tell you I'm combining chart pattern with Fibonacci. So you can combine any of these, but you must have one. You must have something that tells you that, oh, okay, I'll wait for price to get to my support, or probably I'll wait for price to get my resistance. Then I must see a chart pattern. Then I will enter either my buy or a sell. That's it. Or probably I must wait for price to get to this Fibonacci retracement point. And when price gets to this Fibonacci, then I am going to buy or sell. So there must be something which is what we call a predefined rules that is telling us that when this happens, then this is what I will do. Please, if you understand this, please type in a yes on the chat box. Let me clean this off. Please type in a yes on the chat box. Okay, good, good. So now let's go to how you can build your trading strategy using indicators. So we'll be looking at how to build your trading strategy using indicator. And what I'll be doing this afternoon is I'll be talking about 3 different indicators. So out of these 3 different indicators, you can now build your trading strategy around it. So anyone that is easier for you to spot will be what you'll be using for your trading strategy. Anyone that is easier for you to spot is what you will be using. So what are the indicators we'll be talking about? We will talk about moving average. Moving average. That is the number 1 indicator we'll be talking about, moving average. Then we'll talk about the relative strength index, RSI, relative strength index. I hope we will have the time to cover it because our time is fast spent. And lastly, we'll be talking about the MACD, So these are the 3 different indicators we'll be looking at. Now let's talk about moving average. What is moving average? As the name implies, moving average. So it's a software. It's an application, a software that helps us to calculate the average price at a particular period of time. It helps us to calculate the average price of a particular instrument at a particular period of time. That is basically what the moving average does. So now, when we talk about the moving average, there are some things that are important. Now, the first thing that is important when you want to determine your moving average is what we call the period. You should know the period you want to use. You should know the period you want to use. The second one that is important is the method. Now, under the method, we have different methods. We have the simple, we have the exponential. I'm going to show you all this on the chart. We have the exponential. What else? I think. Wait, let me see. We have the simple moving average. We have the exponential moving average. We have the smoothed and the linear weighted. Okay, we have the smoothed, the linear weighted. These are the different type of method that we have. Then period is dependent on you. I'm going to show us example. Then lastly, what do we have when it comes to, what do we need? Then when it comes to the last thing you need to know when it comes to setting a moving average is now, we call it what price, what type of price do you want to measure? So we call it to apply, that is, and the apply has to do with, okay, you want to measure price. What type of price do you want to measure? Do you want to measure the opening price? Do you want to determine the average closing price? Or maybe the highest price at a particular point or the lowest? So these are basically the most common price that you want to get the average. So you need to know all these things before you can set your moving average. So for the purpose of this class, we'll be using 2 different methods. Now, in summary, when you're trying to develop a trading strategy under a moving average, there are 2 ways you want to achieve this. The first one is when you want to develop a trading strategy under the moving average, there are 2 ways you are looking at it. One is Either you want to trade a moving average breakout, that is anytime price breaks out of a particular moving average, that is when I want to trade. That is you using a moving average breakout. And the second one is you using a moving average crosses. So these are the two different ways you can build a trading strategy using the moving average. So you can decide to use a moving average breakout or a moving average crosses. Now let's start with a moving average breakout. So for we using a moving average breakout, we'll be using two different periods. We'll be using two different periods under the moving average. And that is the exponential, we call it exponential moving average. That's the EMA 50 and the EMA 200. Now, let me explain something to you. The EMA 200 helps us to determine the long-term trend of a particular currency. The long-term trend, that is on the longer time frame, what is market really doing? Is the market really on a uptrend? And remember, when the market is in an uptrend, then it means that the market is doing more of a buy. When the market is in an uptrend, then the market is doing more of a buy. So the moving average 200 helps you to determine the long-term trend, while the moving average 20 helps you to determine the short-term trend. The short-term trend. Why we have the last one, which we will not be using it, but is the moving average 100. This is 50. The moving average 100 helps us to determine the medium-term trend. So this is how some people use the moving average. So let me share my chart and let's talk about how to build a moving average breakout using moving average, exponential moving average 50 and 200. So let me share my chart now. Okay. Now, this is my chart. To set, let me delete everything and try to set it so that you can see. Now, to set your moving average, you come to Insert, Indicators, Trend, and you come to Moving Average. You can see it. You click on Moving Average. So when you click on Moving Average, you come to Levels, you look at it. We leave the period. Oh, okay, this is not moving average. So you come here, you can see the parameters, which is the period. So you pick period 200. You can see the method that is talked about. We have the simple, the exponential, the smoothed, the linear. So you can use any period, but for the purpose of our strategy, we'll be picking the period 200. Then we are picking exponential. Then we are applying it to close. You can see we are applying it to close. Then I'm going to use yellow as the line and I'll click on 100. Now the second one I'm going to pick is now another moving average, but this time it will be moving average 50. So I'll change the period to 50. And I'm going to change, exponential remains the same, apply to close remain the same. But this time around, I'm going to change the color to maybe red. Then I'm going to click OK, good. So this is the strategy. Now this strategy, I advise that you use it on a minimum of 1 hour time frame, 1 hour time frame. And remember, we say we are trading the moving average breakout, Now, how are you doing this? There are two ways to trade it. Look at it. If you look at this period, we notice that price is below the moving average 50. This red one is 50, and this yellow one is 200. Now we notice price is below. It broke it, it came back. It broke it, it came back. It got to this moving average 200, but was unable to break it. And what happened? It came back. But what happened? Look at it. At this point, price broke both the moving average 50 and the moving average 200. Now, what this means is at the break of this moving average is when I'll be entering the market. The moment price was able to break, we trading the moving average breakout. You can see it has broken the moving average 200 the moving average 50 and the moving average 200 upward. Now, who can tell me what are we entering for? Seeing that price has broken the moving average 50 and the moving average 200 upward, what are we entering for? Who can tell me what are we entering for? A buy. Thank you, Mr. Lighton. Then this is when I will enter for my buy. Look at it. Let's see what price has been doing since then. See, price has moved as high as 122 pips. Look at it. Price has moved as high as 122 pips. Now, we can see price went up. It came back here. It couldn't break it again. And it's still going up. So this is when I will enter for my buy at the break. So this is what we call moving average break. So you enter here. You will enter at this point, moving average break. So let's see another example. Let's see another example. Now look at it. Price has been, see, price broke the moving average 200 upward. Now it came back here. It couldn't break the moving average 200. And that's why I said, when you are trading, you need to wait for that candle to close. You need to wait for that candle to close and be sure that it has broken it. So you can see price got here, but it couldn't break it and it went back up. Look at it. It came back again. It couldn't break it. It went back up. Now look at it. It came back here. It broke it and it went back again. See, it came back. It broke it here. It went back. It came back. It broke it and went in and went back. This is basically period of consolidation. For someone that knows how to trade, the market was kind of consolidating. But what happened? Look at it. Eventually, price broke it. It came back. It couldn't break it. And since then, what happened? See, look at it. Look at it. Price has been dropping. So this is how you trade moving average breakout. And that's why when you're trading moving average breakout, you must be sure of ranging period. When you notice that the market is ranging, close your trade and wait until it has really given us a clear cut that it has broken. Because look at it, it was finding it difficult. From here, it has been ranging. If I pick this, you notice the market was ranging from here. Look at it. It was ranging from here to even this point until it eventually broke it. And look at it since then. Look at it. Look at it. Look at it. Look at how massive. Hey, until it broke it again up here. So if you have taken this, if we try to determine the number of pips, this will be massive. Let's look at it. Let's even assume you entered at this point when we have the clear downward move. Look at this. This is 623 pips. 623 pips. 623 pips. So this is how you trade moving average breakout. But when you want to trade this, it's better you make sure and be sure that it has really broken out, not that it is ranging. You can see at this point, the market was really ranging until it broke it out here. It broke here, it came back to this, and since then, it has been going really, really, really down. But when you want to trade it, it is important that you compare it with other time frame. I advise people that you compare and make sure that the trend is the same thing with what is happening on 1 hour, on 4 hours, and on daily. Now we can see that on 1 hour, the market is in an uptrend because price has broken the moving average 200 and the moving average on 50 upward. So on a 1 hour time frame, the market is in an uptrend. Let's look at 4 hours. Look at 4 hours. This is where you need to be careful. So we can see that on 4 hours, who can tell me what is the trend of the market on 4 hours? Who can tell me what is the trend of the market on 4 hours based on what we have here? Who can tell me what is the trend of the market on 4 hours based on what we have here? Downward trend. Thank you, Mr. Jeremiah. Because price has not been able to break the long-term trend. Look at it. This is the long-term trend. That is the moving average 200. It is the long-term trend. Thank you, Mr. Lighton. So we can see that price is still below it. So it's still on a downtrend. And this is where you should be careful because it is possible price could do this. Price could come here, get to this point and find it difficult to break it. And what happened? Price push it downwards. So if you decide to buy this, what you can do is you could enter here and use this moving average as your take profit. So you can see this is around 63 pips. So use this moving average as your take profit. So then wait to see if it will break it. Then if it breaks it again, then you can re-enter. But without that, please be careful, because on the 4 hours, it's still on the downtrend. Now let's look at the daily. Let's look at the trend. So you need to compare. Look at it on a daily. You can see. Who can tell me what's the trend on a daily time frame? What is the trend on a daily time frame? What is the trend on a daily time frame? Who can tell me based on what we are seeing? What is the trend, downtrend? Thank you, Mr. Lighton. So we can see that price is still below the moving average 50 and the moving average 200 on a daily time frame. So it is still telling us the market is in a downtrend. So what this means is, let's assume that you entered the buy here. Let's assume that you have entered the buy at the break of this here. Then it's advisable, the first target is for you to use this point as your take profit, this moving average. Use it as your take profit. Then begin to watch it if price will break it. Then if price is able to successfully break it, then the next point you'll be using as your take profit is this other moving average. Then if price can break the 3, then it tells us that what price is ready to go really up. It is ready to go really up. So this is how you trade it, because now on 1 hour we can see that price is already on a uptrend. So what you can do is, if you choose to enter, or maybe you have entered at this point, and if you look at it, if you entered at this point, let's even determine how many pips it will have been. If you entered at this point where price broke it up, to this point will be 208 pips. 208 pips, which will now be you waiting to see if price will break the moving average 200. And the moment price breaks the moving average 200, then you can enter another one maybe around this point. And this is another 145 pips. And look at it. If it now breaks this, then you can now continue on the buy direction, meaning that the trend is ready to change really into an uptrend. Please, if you understand this strategy, please type in a yes on the chat. So I've talked about the buy and the sell. If you understand it, how to use the moving average breakout, please type in a yes on the chat. Good. If you have any question, please drop your question in the Q&A section. You can drop it in the Q&A section. So let's move to the next one. Okay, because of our time, I will not be talking about the moving average crosses. I will not be talking about the moving average crosses. Instead, I will go to the next one, which is the relative strength index. Let me go to the next one because of our time, which is the relative strength index. So let me go back to my chart. Okay, Mr. David is saying, I can't seem to log into my PC. Sorry, we cannot treat that now. One thing you can do is, number one, you can contact your account manager to help you on that. Then number two, you can go to my YouTube and watch the video for Tuesday. That is how to use the MetaTrader 4. Maybe that will help you. If you watch it and you did not understand it, then you can try to contact your account manager for that. I cannot do that now because the time is really fast spent. Okay, so Mr. Anomina is asking, how would we determine the sell on the chart, on the same chart? How do we determine the sell? Now, to determine the sell, you will just be waiting for price to break downward the moving average 200. Let me share my charts. Maybe we are going to just stop in the moving average because of our time so that I can allow people to really understand. Now, let's look for an example of a sell since someone has asked the question. So I will just stop with this moving average so that we can explain better because our time is really fast spent. So let's talk about, let me look at sell. Okay, good. This is a nice one. Now, for you to enter a sell market, now everybody look at this. Who can tell me this is a 1 hour time frame? What is the trend of the market? What is the trend of the market? Look at this. What is the trend of the market? Who can tell me? What is the trend of the market? What is the trend of the market? Yeah, I'm waiting based on what you're saying. What is the trend of the market? Okay, someone said sideways. Someone said sideways. Okay, good. Look at this. on a 1 hour time frame. Yes, it's a sideways market. But if you look at this, we can see that price has broken the moving average downward. Price has broken the moving average downward. Price has broken the moving average downward. And when price breaks the moving average downward, who can tell me what is the trend? When price breaks the moving average downward, who can tell me what is the trend? And price breaks the moving average downward, who can tell me what is the trend? A downtrend. Someone is saying down, sideways or uptrend. Now, please, Mr. Olaiton, the moment price has broken the moving average downward, it's a confirmation that a new trend has started. If you look at it, this is the moving average 200. And we can see that price has broken it downward. The moment you see price has broken it downward, it means that the market is on a downtrend. It means that the market is on a downtrend. It means that the market is on a downtrend. The moment you can see that price has broken the moving average downward, then it means that the market is on a downtrend. You can see, for those that are a professional trader, will understand what I just did. Let me do something else. So if we see this, we can see that the market is currently on a downtrend, because we can see that it has crossed the moving average 200 downward. Now, when you see that the market has crossed the moving average 200 downward, now what I'm doing is based on what Mr. Lighton said, that the market is on the sideways, which is true. So the market has been ranging between this point, between this upper point and this down. But all you need to now wait for is to confirm if price will close below it. If it doesn't, then it still means that the market is still on the sideways. But either ways, because the market is on is below the moving average 200, is on a downtrend. Now let's go to a 4 hours time frame. Look at this. On a 4 hours time frame, who can tell me what is the trend of the market? On a 4 hours time frame, what is the trend of the market? Anyone? On a 4 hours time frame, what is the trend of the market? Anyone? Uptrend. Uptrend, good. So it means that uptrend. Let's go to daily before I say anything. Who can tell me on a daily, what is the trend of the market? On a daily, what is the trend of the market? Anyone? Okay. Uptrend. So will you enter this trade? Now, who can tell me, will you enter this trade? If yes, on what direction? And if no, why? Based on the moving average breakout we explained, will you enter this trade? We've seen the trend, because you can see that on a, you can see that based on our explanation, we can see that on a daily time frame, the market, on a daily time frame, the market is on an uptrend. Then on the 4 hours, we see that the market is on a uptrend. Why on a 1 hour? You can see that the market is on a downtrend. Now, if you see this, will you answer? Will you enter downtrend? And if yes, why? If no, why? No, because it seems like the trend is now weak. Okay, Mr. David, what do you mean by the trend is now weak? Which of the trend is weak? Which of the trend do you mean that is weak? Is it the uptrend that you are seeing it to be weak, or is it the downtrend that you are seeing to be weak? Mr. David. Okay, I can see Mr. Rad asking, can all this be done on a mobile phone? Yes, it can be done on a mobile phone. Okay, while we are doing this, let's go to our mobile phone. Let's do the settings on our mobile phone. Let's do the settings on our mobile phone. So on our mobile phone, let's go to our charts. Let's go to our chart on our mobile phone. So from your chart, you will see an F plus, something like a letter F at the upper side of the chart. You will see letter F. Click on the letter F. Yes, metatrader 4. Click on the letter F. You will see something like a letter F on the chart. Click on the letter F. So when you click on the letter F, if you have been able to, if you have clicked on the letter F, please type in 1. If you have clicked on the letter F, please type in 1. If you have clicked on the letter F, 1. Okay, it's only Mr. Lighton. Where are the others? Where are others? Please, let's get started. Let's do this fast. Our time is fast spent. This is 4 o'clock. Mr. David, are you doing this? Mr. Rag, you're the one that asked the question. Are you doing this? Wow. Okay. Let me continue because of our time. You can always watch the recording and do it on your phone. Okay, so you can watch the recording and do the settings. Okay, good. So click on the F, and on the F, you will see main charts. Then under it, most of you will see moving average. Now, if you are seeing moving average, click on the moving average. But if you cannot see moving average, click on F plus. So if you are not seeing moving average, click on the F plus at the front of the main chart. When you click on the F plus, then you will see trend. Under trend, look for moving average. Now, for those that see moving average, just click the moving average. So all of us will be on the same page. Now, you should have your period. Under the period, whatever is there, change it to period 50. Change it to 50. Period 50. Shift, leave it at 0. Method, change it to exponential. Method, change it to exponential. Then apply to close. Apply to close. So you can do this, and at the upper side, you will see done. Click on done. You will see done. Click on done. Now you have been able to successfully do the moving average 50. Let's repeat the process again. You click on F. So when you click on F, this time around, everybody click on under the main chart. You will see F plus. Everybody click on the F plus. Now look for moving average there. Click on moving average. Now this time around, change the moving average. Change the period to 200. Change the period to 200. Shift is on 0. Method is on exponential. Apply to close. Apply to close. And when you click on that, now this time around, go to the style. You will see the color. Change the color from the first color you use. Change it to something else. Change it to another color. When you do this, then click on done again. So the moment you're able to do this, then the settings is fine on your phone. So that's how to do the settings. So now, in summary, let me try to write the reasons for a buy. So now, based on what everybody, please, let's note this down so that you can use this to trade. For you to buy, you need to wait. For you to enter for a buy, you need to wait for price to cross or to break above the moving average, 50 and the moving average 200 on 1 hour time frame, 4 hours time frame, and daily time frame. This is only the reason you will enter for a buy. To enter for a sell, then you need to wait for price to break below the moving average, 50 and the moving let me just put EMA and the moving average 200 on 1 hour, 4 hours, and daily time frame. These are the conditions that will make you to enter the market for a buy and also for a sell. So please note this. Any other question? Any other question? So this is the summary of what we have taught, we have treated. Any other question? Okay, someone is saying the trading platform you are using to analyze the trade is it CJC market. It is easier to analyze on TradingView is better. Okay, I'm using CJC market. The trading platform you are using to analyze the trade, is it CJC platform? It is easy to analyze, or TradingView is better. Anyone is fine. CJC, I use CJC market platform. Yes, I use it. So anyone is fine. Yes, you can use TradingView, you can use CJC. So anyone is fine. I use CJC and I'm okay with it. So anyone is fine. The only thing is when you analyze, then you go and enter your trade in the correct, in your platform, in your MT4. So anyone that is convenient for you is fine. Any other question? Any other question? Okay, what if one is different? Do we wait? It's advisable to wait. It's advisable because you want to prefer to see a clear trend. It's advisable to wait. It's advisable. So, Mr. Lighton, if one is different, I prefer you wait. It's advisable. So, any other question?